the Home Affordable Program, which is a federal program. Again, this is where you're looking at modifying the mortgage, changing the terms, getting a lower mortgage payment, trying to get a lower interest rate. State program doesn't do any of that. All it's doing is just making mortgage payments for you. This program does not make the payments. However, you can see a significant decrease in your interest rate or possible mortgage payment, which makes it a lot more affordable for you. All right, so some of the things that the Make a Home Affordable program includes is refinance options, MHA, HARP, FHA refinances, repayment plans, forbearances, modifications, and disposition options, which I'm going to cover with you really quick. So with the loan refinance options come into play when your property is underwater. So if you're experiencing a situation to where you've been able to consistently make your mortgage payment, however, your property now is underwater is the term that we like to call it, to where it's at 80%, greater than 80% of your property value, then you may be eligible for a HARP refinance, which is Home Affordable Refinance Program, or either an FHA refinance, where they can look at refinancing the property to get you into a more affordable interest rate. This way they kind of set aside your loan-to-value percentages, but this is for a situation of someone who has been able to afford the payment, except your property now is no longer the value. You've got a drastic decline in the property value, or you're upside down or underwater. You have repayment plans. Repayment plans, just so you understand what they are generally structured with the lender. If you have displayed that now you can afford the payment and you have a slight surplus in your budget, then most lenders will want to do a repayment plan with you to where they increase your mortgage payment for a certain number of months until you're fully current or caught back up. Again, with all the programs that we're discussing, we help you with all this when we're looking at working with the state or i.e. working directly with your mortgage provider. So again, we'll have you complete the packet, we'll analyze it, and we'll discuss everything with you before we submit it. Forbearance agreements. Forbearance agreements are set for individuals who are generally less than 90 days delinquent. And again, this is working with the bank. So if you don't qualify for the state program, per se, then we may look at trying to see if we can do a forbearance agreement with your mortgage company. With the forbearance agreement, generally you can be no greater than 90 days delinquent when you're applying for it. What's going to happen is the bank will reduce or suspend your payment for generally 3 to 6 months. In some cases, they can reduce the payments for a maximum of 12 months, which will give you time to pay the reduced payment, and hopefully within the time frame they allot, you'll be able to find work. So they'll reduce the payment generally between about 30% is what the payment will be based on your gross income. And that new affordable payment, you will just have to pay that for the time frame they allot. And then again, once the time frame is up, then they'll consider you for modification if you're working at that point. So this is a temporary solution for individuals who are delinquent less than 90 days. Loan modification is more permanent. This is where individuals are looking for a long-term and more of a permanent hardship. A hardship could be a drastic decline in income. You were working, had a job loss, now you're working again, and you've had to take a pay cut of 20 or 30%, whatever the percentage is or may be. Again, this is for permanent hardships and where you actually have stable income coming in. So what you see on here under qualifiers, most mortgage companies use 31% as their hardship ratio. So what they're looking at is they're looking at your gross income. So whatever your gross household income, multiply that by 31%, and that is the target payment that your mortgage company is trying to get your mortgage payments down to. So if your gross income is $3,000, then 31% of that is $930. So that's what the mortgage company is actually looking to get your payments down to. So again, just make sure that the numbers, the numbers always have to work. So for the sake of this example, we're just going to round that and say 900. So the mortgage company is trying to get the payment down to roughly $900. How they do that is included under modification include. It's called a waterfall effect. The first thing they look at doing is capitalizing your arrears. They take your delinquent money and they put it to the back end of your loan. So now you're fully current. Now that you're current, now they can look at reducing the interest rate. Now the floor, which is the bottom, the lowest rate they can offer you is a 2%. Doesn't mean they're automatically going to offer you 2% because remember they're trying to get you at that 31% of your gross income. So in the example we use $900 was the target payment they're trying to get. So if they reduce the rate and you had a 6 and now they go to a 5 and 5% can get their payment down to $900, then that's what your rate will be. If they have to continue to drop it till they get to the 2%, then that's what your rate will be. So it just depends on where you are as far as the numbers making sense and matching for the lender. If the 2% rate, if they lowered it to 2 and it still doesn't work, then what they can also do is they can extend your term to 40 years. The 40-year term, again, they add years to be able to spread the payments out to make the payments more affordable. Hopefully that will work for you. If that doesn't work, they can also defer some of the balance and allow you to only pay on a portion of it for the first term, and then once that's completed, once you pay that off, the second portion will come due. Generally, this is what most banks are going to offer you. If they're going to do a loan mod or willing to do a loan mod for you, then this is how the loan modification side works. So they're looking at 31% of your gross income. Whatever that number is at your gross income, that's the target payment, which must include your principal, interest, taxes, and insurance. And so the modification will include the waterfall effect. That's how they're able to get your payment. Now, if you have no income coming into your household, it's very unlikely they're going to do a modification because they have nothing to work with as far as being able to offer a permanent solution. They may offer the previous slide that we went over, which was like the forbearance agreement or some type of temporary workout solution, but nothing on a permanent level like a loan mod will offer you. All right, so let's talk about some disposition options. So disposition options happen to where everything is denied. The lenders are saying, hey, I'm not willing to offer any type of solution. Maybe we tried the state program and the state program denied us as well. So what's going to come back is a short sale or possibly a deed in lieu. What a short sale is where the bank says, I'm willing to accept a lower bid on the house than what you currently owe me. When is a short sale beneficial? A short sale is beneficial simply because it works better than going through foreclosure. If you go through the full foreclosure process, one, it's going to damage your credit. Two, you possibly can be taxed at the end of the year for any deficiency balance. So let's say you owe $150, you sold the house for $125 in the foreclosure sale. The lender could tax you for that $25,000 as a 1099. In the event if you get an approved short sale, with a short sale, you're listing the house with a real estate agent. The real estate agent finds buyers. The buyers in turn make an offer, and the bank accepts it. If the bank accepts it, that offer, whatever the difference is between that accepted offer and what your current balance is, the bank will waive it. Also, some banks will also give you relocation money, generally between $2,000 to $3,000 to help you with relocating. All this is for an approved short sale. Now, if that's something that you're interested in, then, of course, you need to also let our agency know, and we can help you with that. With a deed in lieu, that's just a transfer of titleship where you pretty much just signing the house back over to the lender. Again, most banks are not doing deed in lieu because they want you to try to sell the house first, which is the short sale route. So those are the two main disposition options when the banks are saying everything else is denied or they will be willing to offer you. Some quick FAQ information for loan modification. How much does it cost? Again, it's free as well. These programs are no cost to you. We will help you with the packages and get everything submitted. We work directly with the lenders or directly with the state agents and get all that documentation uploaded for you. Do I have to be delinquent to receive assistance? Same as the state program, you do not. You may be current, you may be delinquent. Your current status, as long as you have a qualifying hardship, then we can look at your case and look at trying to submit your information. I have bad credit, will I still qualify? Again, credit score does not matter in most programs with the loan mod. However, if you're trying to do a refinance, then yes, they will look at your credit rating when they're trying to do the refinance. What comes into play there is just your loan to value percentage. Something that's very common, I applied for a loan modification and was denied. Am I still eligible? Yes, you may. They've recently made some changes for the Make Home Affordable program, and so if you were denied in the past, then you are still eligible to apply based on what your hardship was and how soon you were denied. Same thing goes for I'm currently on the loan modification now. Can I still apply? Yes, you can. Like I stated, they recently made some changes to the Make Home Affordable program. So please, if you're experiencing some type of hardship, make sure that you fill out the documentation correctly. Get it over to us so we can work with you. At the bottom is another link for some FAQ information for the Make Home Affordable program that can actually help you. So today we went over the state program, which is the North Carolina Foreclosure Prevention Fund, and we went over the Make Home Affordable program. Both of those have several components to them, so there's multiple options underneath each one, which the main thing is filling out the documentation, and then that way we can evaluate your case and see what's going to be the best option for you. Hopefully the PowerPoint that you listened to today gave you some insight on how they work, understanding the programs, and what you may or may not be eligible for. So on here, some of the homeowner responsibilities we ask for patience, commitment, and being responsive. One is because everything is a manually underwritten process. So we're working with you on submitting the packages to your lender or rather to the state housing agency to see which options are going to be best suitable for you. And we don't make any final decisions. So again, we understand time is not our best friend right now. However, we have to be patient and understand and wait until those decisions are made and any updates are given to us so we can pass it on to you. We want to make sure that you're committed and being responsive because at the same time, there's a lot of clients that need assistance, and when the documentation is needed or someone is asking us for the documentation, we need to make sure that you get that over to us as quickly as possible so that way that can help you with getting an outcome faster. And being responsive is very key. Please make sure you return phone calls or give us updates on information if you change your mind on a situation or you would like to go with a different route, or if you're having problems with trying to get documents that we actually need. There may be another way or some resources that we can help you with. All right, so each one of you, there are packages that's online, and you should have received it through email from our intake specialist. If you go online to our website, you can download our mortgage assistance package and our hardest hit fund package. Actually, the mortgage assistance package is required for you to receive assistance so we can start working with you. Again, that's on our website. You can find that under our mortgage, North Carolina Foreclosure Prevention Fund, and also under Make Home Affordable. It's located in both locations. So please, please get that packet if you haven't received it through email yet, so that way you can go ahead and get it completed, get it sent back over to us. Any questions that you have regarding this PowerPoint, please contact myself, Demario Stanley, at mstanley@choedc.org. My office number is 919-241-4718, extension 23. Emails, I will try to respond to you as soon as possible. So again, any questions, any concerns, email is the preferred contact method. So please do so. And hopefully this workshop or this PowerPoint helped you out in a lot of ways. And I look forward to working with you. Thanks. Have a good day. Testing 1, 2. Testing 1, 2. Testing 1, 2. Testing 1, 2. I can't believe I just did all that talking and it didn't get recorded. Are you serious? Testing 1, 2, testing 1, 2, testing 1, 2.